Hey everyone, it's Fred at Sed Realty here in Southern California. So today we've got a special edition for you. We have Paul Spann with Spann Associates, a local CPA and OC. And today's hot topic, as you may or may not know, is the tax reform that took place for 2018. We've gotten so many calls with investors and clients, and obviously Paul has as well at his office. And we said, you know what, let's take the next 5 minutes or so, talk about some of these hot points when it comes to real estate, and see if we can answer some of those questions that you may have. So Paul, welcome today. Thank you so much for your time. So I thought we'd get started right away with the mortgage interest deduction that's been so hot. And what I know is that it was capped before at $1 million that could be deducted as far as mortgage amount goes. Now it's been taken down to $750,000. Can you talk more about that?
Yeah, so the new tax law says if you've incurred a mortgage as of December 15th or prior, you have that grandfathered $1 million limitation.
Right.
So after December 15th, 2017, forward into 2018, we're limited to mortgage interest on $750,000 loan,
Right.
but it also is for your primary and your second home.
Perfect. I got that. And then I would think in general, in OC, parts of LA, Inland Empire, a $750,000 loan amount, for the most part, is still okay for the average real estate transaction that takes place. Yet for a higher end luxury market, on the jumbo loans, that's where they're going to see an effect, correct?
Correct. I think they'll see the biggest impact at that point.
Got it. And then second point is home equity lines of credits, or what we know as HELOCs. Typically they get them for debt consolidation, rehab the property, buying investment property, whatever it is. Yet some of those HELOC restrictions are now non-deductible, is that right?
Correct. Actually, going forward, HELOCs are no longer deductible. However, if you use the HELOC to buy, build, or improve the property,
Okay.
then it is still deductible if it's below the $750,000.
Got it. So as long as you get a home equity line of credit and you use it to buy the property, build the property, or rehab the property, you can still deduct it, yet you can no longer use it for debt consolidation, anything whatsoever like that, and be able to deduct that part of it, correct? Got it. Okay. Number 3, so there is now a cap of $10,000 on being able to deduct some itemized deductions, state property taxes. I figured you could speak on that as well.
Sure.
Come up lately.
There's also now a limitation when it comes to personal itemized deductions.
Okay.
When it relates to state and local income taxes and property taxes on a first and second home, we're limited to $10,000 total.
Okay, perfect. And that is, in regards to a lot of these restrictions now, what you can and cannot deduct, the majority of them apply to personal or primary residence, yet investment properties are still moving forward as planned for the bulk of their regulations, right?
Correct. These limitations that we're talking about and hearing about relate to your personal itemized categories. The business, rental properties, those still are unlimited.
Okay, got that. And then last topic on the real estate aspect of it is 1031 exchanges. So 1031 exchanges, ladies and gentlemen, is used by investors who own investment properties. And if I own a property today, for example, and I'm going to sell it, I'm going to have a $100,000 net gain on it, I'm going to get taxed. Unless I do a 1031 exchange and use that money to buy another property and then defer the taxes to a later date, right?
Correct.
Are there any changes with 1031 exchanges that took place?
1031 exchanges are still allowed for real property. They no longer apply to business equipment such as vehicles or artwork.
Okay, got that. So far we talked about the 4 main topics that have come up, which is the mortgage interest deduction, not being able to deduct home equity lines of credit like before, state property taxes and deductions capped at $10,000, and then before 1031 exchanges. So are there any last minute tips or info that you want to give these ladies and gentlemen because of calls and questions you've gotten at your firm lately?
Sure. I think that the biggest takeaway for 2018 forward is don't assume one solution is going to apply to you. We can no longer say a general rule of thumb, and I think we're going down to a very specific tax law changes that we're going to relate and reflect everybody's taxes differently.
Okay.
So for our individual clients who actually itemize their deductions, there's a lot of changes that I think and would encourage you to speak with your CPA about and how it's going to impact them. And especially for the business owners, including rental properties as businesses, it's going to be very important to meet with your CPA because of another qualified business deduction that's available to us, which is 20% of income.
I heard about that.
And that's a new tax law as well. And that's going to be huge as far as how it's calculated, which we still don't know all the details too. There's some limitations and there's some phase outs based on income levels. There's also some limitations and phase outs based on the type of business.
Okay.
Service businesses such as ours
Right.
may not qualify if your income's too high.
Interesting.
And so there's additional phase outs, but I really encourage everybody to meet with their CPA as early as even the first quarter of 2018.
Oh, man. So let me ask you a question. All this tax reform, can somebody watch this video and know everything about it?
No, no.
So I bring that up, guys, is because we get a lot of questions asked to our office, Paul's office, and Paul and Spann Associates is who we've been sending our clients with any accounting questions as far as referral goes. He is our preferred vendor when it comes to being a CPA and accountant here in OC and local in SoCal. And I urge you guys and gals to give him a call at his office with any questions that you have. Along with this video and this blog, we're going to have all of Paul's direct information. And when you call his office and use the promo code FredSaid, you will get a free consultation over the phone to see if he can answer your questions about any tax reform or anything in regards to your personal or business taxes. So Paul, thank you so much for coming in today.
Thank you.
Hope that you guys and gals got some great value out of this, and we'll talk to you next month at our next vendor spotlight. Take care.